Okay.
All right. Okay, we're ready to go.
Wonderful. Well, good evening. Thank you so much for having me. I'm very excited to be here with your class tonight and talk about steps to home ownership. My name is Allison Wolf. I'm with Freedom First Credit Union, and I work with our affordable housing loan program, specializing with first-time home buyers and down payment assistance programs and all that exciting stuff. So I'm excited to have the opportunity to talk with you tonight about some steps to home ownership. And this presentation, I believe you got a copy of it in advance. So what I don't want to do is just read to you what you already have. I kind of want to expand on that. But this is designed to talk about and cover things that we often hear people say, oh my gosh, I wish I would have known that before I started this process. It would have been so much easier. A lot of loan programs, especially first-time homebuyer programs, do require different types of homeownership education courses. And I'm going to try not to cover the information that those courses cover, because that's something that as you were to walk through the process, you'll probably have to take. And I don't want that to be redundant. So this is kind of just some of the tips and tricks before you would really get into that purchasing process, if that makes sense. Okay. Please feel free to ask questions. What's most important to me is that you get out of this what you want to. You're taking your time tonight to be here and to learn. So I want this information to be as specific to you and beneficial to you as possible.
Okay, thank you.
Absolutely. So as I get started, is there anything that anyone on this call can say, I want to know about this? Do you have a question that you want to make sure is answered? What's kind of your thought to begin with? What do you want to get out of learning about preparing to buy a home?
Okay, I have a question. For example, my husband, he's 66 and 53. I don't know in Virginia, but I know like in Florida, other states, they have some like a special loan for senior. And my question is, that work in Virginia is better for me because I'm younger to have the loan on my own, or it's better for my husband?
Okay, that's a good question. So qualifying and who's on the loan and what type of programs?
So which program is better for senior people or for people like me, 53?
Sure. We will definitely, I will make sure I cover that when we talk about loan programs.
Okay, thank you.
Absolutely, thank you. Any other questions? Okay, well, let's see if we, oh, go ahead, Luis, did you have a question?
Yep, sorry. Yesterday, on Thursday, I saw the information about how long I have to prove work in USA. I think so. It's 2 years, right? How?
Most programs, yep.
Okay.
And we can talk about what that means and what that looks like.
Okay. Okay.
Absolutely. Yeah, definitely. So work history. I'll be sure to make sure we hit both of those. All right.
Okay. All right.
So,
thank you.
absolutely. Thank you. As you can see from the agenda here, we're going to talk a little bit about who should buy a home. Should I buy a home? Where do I start? What type of programs are available? And how do I prepare? What tips and tricks are there to make the qualification easier? Real estate agents, we're going to talk about what real estate agents do and the role that they play. And then just some resources and websites that can be available for you as you start the process and just start learning. So moving on, very similar to the slides that I provided here, some of the pros and cons of home ownership. It can be a sound investment and it's your own. You can paint the walls whatever color you want. You can hang stuff on them. You can remodel. You can do all that good stuff. It's typically considered a long-term payment stability. So if you get a loan and it's a fixed rate loan, you'll know what your payment's going to be versus rent that can change. Possibly some tax benefits, and that just depends on the tax laws at the current time. Feeling proud that you own something that's yours and you've worked to accomplish that. Some downsides to owning a home are there's no landlord to call if something breaks. If something breaks, we have to fix it as homeowners. So being prepared with an emergency type of savings account or something can be really important, because you never know if a refrigerator is going to break or your washing machine or something like that. And now all of a sudden that's going to be an additional expense. Sometimes, and Roanoke is unique, but sometimes there is a higher cost to purchasing a home and a payment than renting. And I can say from an affordability factor, there are a lot of opportunities to purchase here in Roanoke where your payment may be the same, if not even sometimes a little bit lower than rent, because rents are expensive in Roanoke. And there still are many neighborhoods that have lower sales price ranges that people can take advantage of. Another con or another negative is that you're less mobile. So if you're thinking you may move in a short amount of time, you may not want to purchase because you're tied down a little bit more to that expense of having a payment if you can't turn around and sell quickly in the future. Potential foreclosure. So if someone gets into a situation and they have a hardship and they can't make their mortgage payment, that bank can foreclose and ask them to leave, ask them to take the property back and ask them to leave. And the other piece is you have to prepare for future expenses. Right now I have a little savings account that I'm trying to put a little bit of money in each month because I know my house is going to need a new roof in probably the next 5 years or so. And that's going to be a big expense. Every time I drive up, I say, man, that's a big roof. So I'm starting to look at that and think about that and know that that's going to be a cost of home ownership that's going to come up sooner than I expect. All right. So moving on, where do I start? And this is one of the most common questions I get is, where do I even begin this process? And a lot of times I will get phone calls from people who saw a real estate sign in a front yard on a house that they have an interest in, and they call that phone number and they talk to the real estate agent. And the first question the real estate agent asks is, are you pre-qualified? Do you know how much you can afford? Are you working with a lender or a bank? Do you have a loan, a pre-qualification for a loan already? So it's usually best to start with the lender, because you can then know what you qualify for, what loan programs are best for you and available to you, and then that can help you find the right house in your price range and in the condition that it needs to be for your loan program. So that would be my best advice there, is start with the lender and get the dollars in place first and know what you're looking at, and then you can find the home. That way you're looking at a realistic price range for your comfort level and for your affordability. So different types of lenders and loan programs. There are lots of different types of programs. Most lenders offer very similar programs because we all play by similar rules and similar guidelines. With that being said, there are some community banks and community credit unions that offer special programs specific to our area. And usually that's a good place to start. So different types of lenders. You have your credit unions. Credit unions are local, they're member owned, they're familiar with the community. They sometimes have some down payment assistance programs, and they work to really try to meet the needs of your community. Large banks and community-based banks also have a variety of loan programs. And then you have mortgage brokers. A mortgage broker is a company that this job is to shop and find the best loan program for you. Sometimes there's additional cost involved because they're doing that research for you. But with that being said, you're here on this call and you're working to educate yourself. So I would encourage you to go directly to a credit union or a bank because you're already doing the homework of that mortgage broker. So going straight to the lender may be beneficial for you. Online lenders, I would suggest staying away from simply because they are usually not local to our area. And we live in a very unique area because we are urban and then we get rural pretty quick. We have cities and then we have counties and a lot of land, and we're just a unique footprint there as far as lending and homeownership goes. And when you're working with someone that is an online lender, they're going to shop a whole bunch of different places for you, but you're going to struggle to find a human to talk to because it's all an online process. And they're not familiar. They're typically not familiar with our area, and we're unique. So different types of loan programs. We have conventional loan programs, and I'm just going to run through a few little tips here. A conventional loan program is a loan program that's offered through a bank, through a lender, and they typically require a 5% down payment. And they are underwritten to Fannie Mae or Freddie Mac's guidelines. FHA or VHDA loans often require a 3.5% down payment, or you can couple that with 100% financing. And I don't want to get too granular into all of this because this is the information you would talk to a loan officer about on your own personal situation. These are just kind of options here. USDA is a rural type loan, and it is for those that may be looking to purchase land or in a more rural area and out in the county. They offer 100% financing programs. VA loans for our veterans offer 100% financing programs through the Veterans Administration. And then in-house loan programs, which your community banks or credit unions in your area may offer. That's what I'm responsible here for at Freedom First. Those programs usually require at least a 3% down payment, but we can look at different options and couple that with down payment assistance that may be available in the area. So first-time home buyers, the definition of a first-time home buyer is anyone who has not owned a home or owned real estate in the last 3 years. So if someone owns a home in the past and sold it and now is looking to purchase again, if it was 3 years ago, you're considered a first-time home buyer and you can take advantage of those programs. Those programs usually do allow for a lower down payment or no down payment. And they do require a homeowner education course, often offered through VHDA or depending on what type of down payment assistance you're using, they may have real specific requirements for that as well.
Okay, I have a question about.
Sure.
For example, in my case, my husband is in the agreement and everything, because I have my house in Dominican Republic, but that is how, I don't know how to do the question, but that will be considered in US my first.
That's a good question. I will get clarification on that.
Okay.
I had that scenario many years ago and I don't remember the answer. So I don't want to give you incorrect information, but I will definitely follow up on that and I'll reach out and I'll give that information to Morgan.
Okay, thank you. We appreciate it, because maybe in the
Absolutely.
future I refinance and I want to know about.
Yes, I wrote that down when you mentioned it earlier and was going to try to look it up real quick, but I will find that out for you.
Thank you. Okay.
Absolutely.
And just while we're paused, I have everyone muted. Does anyone else have a question? It might be a good time now if you've been trying to ask a question, because I have had you muted.
Okay, same question like Ada. I have a house in Mexico, but it's not applied for USA, right?
I don't believe so, but I will confirm that.
Okay, okay. Good.
Absolutely.
And I'll make sure I send both of you guys that information, and I'll do a little bit more research to see who else at BRL might have a house in a different country so that they get that answer as well.
Okay,
Perfect.
thank you.
Yeah.
Great, thank you. Okay. As far as down payment assistance goes, there's a lot of different types of down payment assistance programs. They typically run on a cycle and come available at the beginning of the year or a certain amount of time, and then those funds can be available until they run out. They are usually driven by income, household income. So even if someone is trying to qualify for a loan on their own, other incomes in the household would be considered for that qualification. And it's based on income amount and household size, how many members of the household there are. So we don't need to get any more specific than that. That's something you would talk to your loan officer about.
Okay.
I do have a question about that one.
Sure.
We have a student who I don't think came today, but he has a sister and she has a child, and they are considering moving in with each other, but it would still be his house.
Mm-hmm.
Would her income count within that, or would they kind of be like a renter situation?
Her income would count as a household member,
Okay.
and so would the number of household members. So the child will count as a household member, so the threshold would go up as to what that limit would be.
Perfect. Okay. Thank you.
So her income would not be considered for qualifying for a loan or making the mortgage payment, but it would be considered for the amount for the down payment assistance.
Okay. That makes perfect sense. Thank you.
Absolutely. Okay. So the next slide might be a little more challenging virtually, but it kind of focuses on how much do I qualify for, or how much do I qualify at all? And the easiest way to look at that is there's 4 main pieces that underwriting guidelines are based on, and every loan program has kind of standard guidelines, and every loan program has unique guidelines. But overall, this is what is looked at: is credit. Does the borrower have credit, use credit responsibly? Are they making their payments on time? Things like that. Most loan programs are credit score driven, and they can have different thresholds. What I would suggest is, as you're working through the process of building credit or preparing to purchase, if you can work to try to have a credit score of at least 680 or higher, that's going to give you many more options as far as loan programs. And then from there, the higher the score, probably the better the pricing, the better interest rates you're going to get. So the higher the score, the better short-term and long-term, especially for qualifying for a mortgage. So they look at credit, the character, they look at capacity, and the capacity is at what we call a debt to income ratio. So we look at your gross monthly income divided by your expenses, and we look at that as a percentage. So that's what we look at. So for example, HUD's definition of affordable is no more than 30% of your gross income be allocated towards your housing expense. So if more than 30% of your income is being applied to your rent or your future mortgage payment, that's considered not affordable. So that's what we try to stay under. I always like to ask the question first of, what do you feel like a payment is that would be comfortable for you? And let's talk about that compared to how much you pay in rent currently. Because it's much more important to me that you're comfortable with your payment than we just qualify you for an amount, and that payment might be more than you would be willing to make. So I like to work backwards and try to focus more on what payment you want to have long term. And then the next one after the debt to income ratios is the capital, so the down payment. How much does somebody have saved up? Even if you don't need the funds, it's good to have them on hand. So as much as you can save through this process, that's a good thing. If you qualify for 100% financing program and you decide you have saved 5%, but you want to keep that in the bank because you might want to do upgrades or you want to have a little bit of an emergency cushion to fall back on, you absolutely can. But the more that you have saved, the stronger that makes your application look. And then the next piece is the collateral, so the actual home and what type of condition it's in and whether or not that the value of the home supports your sales price. And we look at that through this process as well. So we want to make sure that the house is worth what you're paying for it. And we do that through an appraisal process. Yeah. Okay. So now talking a little bit about income. Not all types of income can be used to qualify. And this is something that I think is helpful just to know in advance. Most loan programs do require a 2-year history. And with that being said, there might be a unique circumstance where that could be looked at differently, but most of the time you want to work to have a 2-year history. If I'll give an example of something that's unique that some local community-based, a credit union or a bank or something may consider. In our area, there are several employers who hire through temporary agencies, but the workers are assigned to one specific job. And they stay at that job for a long time, but on paper, their pay stubs may come from the temp agency. So being a local or community-based local lender, we understand that, and we can look at that a little bit differently, where someone that would be working with a larger bank or somebody that's not local, they wouldn't accept that. They wouldn't accept income from a temporary agency. So we can look at things a little bit unique. But for the most part, we're looking for a 2-year employment history. If someone is self-employed, we would have to have at least 2 years of tax returns. And if someone is a W-2 employee, then we would just need your W-2s and your most recent pay stubs. So that's what we're looking at there. If a person is paid overtime or a commission or some type of like an incentive for different types of programs, you have to have at least a 2-year history to be able to count any of that type of like sales commission or some type of incentive or overtime. Something else that can be challenging to use would be like part-time or temporary or seasonal income. Our program here at the credit union does allow for those types of income if it makes sense. So, for example, there's a lot of medical workers around here, and we may help somebody that is a firefighter and works in the winters part-time as a tech at one of the hospitals. They will always be able to do that. Most of the firefighters here, a lot of the firefighters work 24-hour shifts, so they work 9 days a month. So it's common that they have another part-time job when they want to. So things like that, we can look at that in a way that makes sense for our community.
Okay, I have a question for you. So the migration situation is matter for that process. I mean, I holding the H-1B visa. That visa is for 3 years. Mm-hmm. So it is matter for this qualify process.
Yes.
Yeah.
Yep.
Can I don't have the 2 years working in USA, but the next year in March I got the 2 years. But with my current immigration status, can I get some house or buy some house?
You may be able to. We'd have to look at your your information. But if you have a work permit that's current,
Okay, good, good.
And sorry, so Luis, you worked for the same company in Mexico, and they brought you to the. No, okay, never
No,
mind.
it's a different. Yeah, yeah, it's a different company. Yeah,
Okay,
yeah.
I was wondering if it was the same company, would his work history in Mexico count? Or because if they transferred him up here, or would it have to be 2 years of work history in the United States?
Mm,
we could probably look at that on a case by case basis.
Okay,
And if you had a work history previously, that would still count as a work history.
okay.
oh, good, good, very good.
Absolutely. Great questions.
Thank
Okay. Absolutely. So moving on, talking about credits and debts just a little bit. Credit score and payment history is very important as you're establishing credit, especially when it comes to purchasing a home. Um, Trade lines, what we often call trade lines, are like the types of debts that you have, whether it be an auto loan or a credit card or a credit builder type of account. Usually, most loan programs want to see 3 or 4 of those trade lines. So that's something that you just want to work with your loan officer about and then figure out how we can help you to establish credit, but not take on so much debt that it would impact your qualification or you wouldn't be able to pay it back easily. There's kind of a fine line there. So that's definitely where you would want to work with your loan officer or work with one of the like the FEC counselors or someone there as you're working through the process of establishing credit and working to achieve your goals. Co-signing, I will give my spiel on this. Try not to co-sign for anyone. I don't want to say never, but if you co-sign for someone on a loan, please understand that you are just as responsible for that payment as the person that's taking out the loan as well. So it usually will impact your qualification because we're going to have to count that payment as part of your overall debts, even though you shouldn't be paying it. So the way that I say it is if I'm going to co-sign for somebody, what I'm signing up for on paper is that I'm going to be perfectly happy making that payment for them if they choose not to. And if you can't say that, then I wouldn't do it. Okay, so that's all about that. Okay, we talked a little bit about debt ratios already, and that's what we look at. So a few tips to prepare as you purchase, and these are just kind of little things to be prepared for. Start early and learn as much as you can along the way. Find a lender, find a financial counselor, find those that you feel like you can really learn from and educate yourself. There are no silly questions. If you have a question, somebody else I'm sure has that question. Ask and make sure you know and you understand, because at the end of the day, when you go to buy a house, you're going to sign a whole bunch of documentation taking responsibility for paying, buying a house and paying back that loan. Make sure you understand exactly what you're signing up for. And if somebody's not willing to take the time to explain that to you, find somebody that does, because that's the most important part. Work with somebody that you know and that you like and trust. Provide as much information up front as you possibly can. So we will take all kinds of information on the application, and then part of our process is we're going to verify all that. And there is a part of the process that's called underwriting. The underwriter is the person or the machine, the tool that approves loans. We never, ever, ever want to surprise the underwriter. Underwriters do not like to be surprised. We like to tell them everything right up front, because if they get a surprise, sometimes they don't think in the most positive way to fix it. They assume, uh-oh, what's going on? So just be very authentic and upfront about what the situation is, and that way everything is accurate and easy to verify and be able to move forward simply. Be prepared to provide documentation during the process. And I put a list here of the most common types of documentation that's needed. One thing that usually does need to be addressed that's important is your address. If your address on your identification does not match your current address of where you live, be prepared to provide some type of proof, like a utility bill or something, of where your current residence is. That's same with going in and opening a bank account. But we want to make sure that we're verifying the rent for the proper place that you're living. As far as assets, at least 2 or 3 months of bank statements we would require. The other piece to think about with that is if your payroll is direct deposited into your bank statements, that's pretty easy to verify, but we do look at deposits that do come in. And if there are deposits that are coming into your account that are not payroll related, it's not a problem, but just be prepared to write a letter of explanation of what it is, especially with the income-based programs, because what they're doing is looking to make sure that there's not additional income that we're not acknowledging for some of those programs. And be prepared to provide pay stubs, updated pay stubs. Start hanging on to your pay stubs. It'll simplify your life later. We love to see lots of pay stubs. Okay.
Hey, Allie, I have a question.
Sure.
It's Araceli. So in regards to the 2 or 3 months bank statements,
Yes.
Having let's say a negative balance, would that interfere with moving forward, or is that a bad mark on the application process?
Great question. So bank statements, we're kind of looking for 2 different things. So the answer is maybe, but we're looking for 2 different things. The first is what I just mentioned of additional deposits or additional sources of income. And then the other thing that we're looking at to verify is we need to make sure that the funds, however much the buyer is going to be contributing towards their down payment, that they have it saved. So let's just say the loan program requires a 3% down payment and the home, it's late. So we're going to do easy math. The home is $100,000 and it's a 3% down payment. So that would be $3,000. So we would want to see that buyer has at least $3,000 on deposit during that time. So if that account, for example, if that bank statement went negative by $10 or $15, and then the payroll came back in, and by the time the statement's cut, there's plenty of funds available, I think that's acceptable as long as it shows a pattern of it. But what we want to verify is that that borrower has those funds available as to what related to what they need to close.
Thank you.
Absolutely. Does that help answer it?
Yes, thank you.
Great, thanks. Okay, let's see. So a few other helpful tips. Bankruptcies, if someone files bankruptcy, that will definitely impact your qualification for a period of time. Typically, someone would have to wait at least 2 years from the discharge of a bankruptcy and reestablish positive credit. Some loan programs, or if there was a property involved, may even require 4 years. So just something to think about. Be patient. There's lots of moving parts in this process. There's lots of people involved, and all of that, everybody's coordinating. So there will be periods of time where there's lots of stuff that you're involved in coming at you all at once, and then you're just sitting and waiting. And then there's lots of stuff happening at once, and then you're sitting and waiting. So just try to be patient. It feels like a long time, but it goes by fast. Complete a spending plan and a budget and know how much you want your payment to be. And I talked about that a little bit before, but one of the first questions I always ask is, how much do you pay in rent currently? What's your obligation? And what do you feel like would be a comfortable payment for you in the future? And that payment would include taxes and insurance, but it would not include utilities and things like that. So just think about that. And if you have that spending plan drawn out, or you can say to me, you know what, Allie, my rent right now is $700 a month, and I don't want my future payment to be any higher than that. That's where I'm comfortable. That's good to know, because then I can take that and say, based on that, that would give you a sales price of X amount of dollars, or a loan amount of X amount of dollars, and keep your payment where you want it. So we can kind of look at it that way. A few other tips. Once you have started the process of purchasing and you have a contract and you've made your application, make sure that the least amount of things change during that time. So if you take on more debt, or if something drastically changes your credit, or if you change jobs, that can definitely impact your qualification. So the easiest way to think about it is when you get your pre-qualification, and then when you make an offer and you sign that original application, we're verifying all of that information and we're qualifying you based on that information. So don't quit your job. I know that sounds strange, but believe me, it's happened. And usually for legitimate reasons. Someone gets a better offer, they get their loan is approved, they think they're good to go, so they turn their notice in. And the last one that I had happen, it made perfect sense, because this person wanted to try to move the week in between jobs. And they thought, oh, my loan is approved, I'm good to go, I can buy my house, I can move, I can start my new job. Makes perfect sense in their mind. But I promise you, as a lender, we are going to call and we are going to verify your employment, and we are going to check your credit and make sure nothing has changed within 24 hours of funding your loan. So don't let there be any surprises, as I mentioned before, because that definitely can change everything. And again, yeah, just try to keep your application as simple or as consistent as it was to begin with. Or if something changes, let us know right away. I helped someone a while back who had to purchase a new car in the middle of a transaction because their car was impacted by one of the storms and the floods, and the insurance company totaled it. So that person then called me and said, oh my goodness, am I going to have a problem? I have to get a new car loan. And it ended up that payment was right in line with what it was before. It made perfect sense. So we were still able to move forward. But had that person not told me and that came up as a surprise at the end, that could have been an issue.
I have another question for you, Allie.
Sure.
If you can scroll up to on that paper real quick, right there. So when you say don't take on new debt or codes, don't take on new debt, would the effects of paying off debt be similar to that?
Good question. Typically, no, because if you're paying off debt, you're reducing your ratios, you're reducing your obligation. If somebody had very minimal credit and they paid it off and then they had no credit, possibly, depending on the loan program. But if someone were to just pay off a credit card or something like that, that would not be an issue, because really you would just be lowering your overall expenses.
How about if it's money that you had set aside for a down payment? And let's say you're not using it, but that was taken into consideration. So you have, $3,000 set aside, and then you decide to pay off a credit card that's $1,500. Would it be better for them to pay off that debt or have that $3,000 and then just pay off the debt afterwards?
That's a great question. And that would kind of be a one-on-one specific scenario. It would depend on what type of loan program it is. And it would depend on how much they need to contribute at closing. And it would depend on how much the loan program requires that they have in reserve deposits. So that would be a situation where you definitely want them to talk to the loan officer and just make sure that they're not going to hurt themselves, because in that scenario, if you end up with a last bank statement that has less a lower balance than the first bank statement, that could look a little strange. So good question.
That makes sense. Thank you.
Absolutely.
I
Thank
have
you.
a question.
Sure.
So, say for instance, they have open credits, but they're not using their credit cards because sometimes open lines can be amount attached to your credit to, I guess, help build it.
Mhm.
So, would that affect it even if they're not using it, if they have a credit cards open, if that makes sense?
No, actually, they usually don't even pull. If there's a open credit card and a zero balance, it just shows that there's a zero balance and zero payment due.
Okay, so that doesn't necessarily affect it usually.
Nope. No,
Okay,
that's not a
awesome.
bad thing at all. That just shows that they have credit available and they're choosing not to use it. So that's
Okay, that's good.
that's usually beneficial.
Okay, thank you.
Absolutely. Okay. So moving on here to the benefits of working with a real estate agent. And I just want to hit on this. I've got everything kind of listed out here, but one thing that I think is important to share with the piece with a real estate agent is we as buyers are not paying the real estate agent. Typically, the seller of the home pays for the real estate agent through the proceeds of their sale. So sometimes people think, oh, I'm going to save a little bit of money and I'm going to try to purchase on my own without a real estate agent. And that's not the case. So a real estate agent can really be beneficial because they're going to help you negotiate. They're going to make sure you're using the right legal forms. They're going to make sure that necessary inspections are covered. They're going to help you negotiate. So it really is a benefit to be able to work with a realtor or a real estate agent. And for us as on the buyer's side, there isn't a cost involved with that. So I would definitely say talk to a real estate agent, work with somebody that you are comfortable with, and they are going to help represent you and help walk you through the process. As far as anything else, buying a foreclosure or a HUD home, some loan programs don't allow for it. Most loan programs do allow for foreclosures or for loans that the bank has taken back. And that's perfectly acceptable. But just remember now you're dealing with the bank as a seller instead of a private party, which kind of adds one more layer of approvals. So you just have to make sure you're extra patient instead of just regular patient for that process. There can usually be a few more delays and things like that just because you're waiting on someone else. The other main piece with the foreclosure on that too is that they're usually sold in as is condition. So even if you get a home inspection and you walk through that process, you're not going to be able to ask the seller to make repairs. You're going to have to purchase it in the condition that it's in. Were you going to ask a question, Morgan?
Yeah, so I know that they have these foreclosure auctions.
Mm-hmm.
So for example, if we had students that are looking at those, would they get approved for the loan first, or is that something that you would maybe not recommend, or?
Good question. Typically in the foreclosure process, all properties go up for auction on the courthouse steps. Most of the time, it's the bank that's going to represent and buy the property back for what is owed, and then they're going to resell it in that foreclosure process. So usually if someone's going to go and bid on it in an auction type situation, it usually requires a pretty decent down payment, or it's investors that are just going and offering cash. So most of the time we as home buyers, especially first-time home buyers, would probably not be involved in that process as much, but more just purchasing then from the bank once the bank takes it back.
Okay, that makes sense.
Good question. Okay. And then the last bit of information here is just kind of basically finding a lender, finding a loan officer, finding a real estate agent, and different resources and links for you to look at. Finding a lender, there's a lot of great resources in the area. I can speak to Freedom First from that. We have our in-house program, that's just what I'm responsible for. And then we have a very robust team on our home loan center side. We offer a variety of loan programs and have wonderful, wonderful loan officers to work with. But just ask around, talk to people who have purchased, and especially with a real estate agent too, find out who, if you know somebody that's purchased a home, who did they use? Were they happy with their service? And then there's some sites here of realtor.com and rvar.com. One thing I will caution you, when you're looking at websites, if you go on like realtor.com or homes.com, some of the third-party ones will give you an estimate of the payment. I wouldn't focus too much on that, because a lot of times that may be based on putting 20% down or using different types of loan, different type of loan program, or it does not include the taxes and the insurance. So so a lot of times that number is lower than what the actual payment would be. So when you're looking at those homes, definitely use those websites to research, but ask your loan officer what the payment would actually be on those homes. And usually what we do is we calculate it out off of the sales price. We look at the property and we calculate the taxes accurate off of the tax ticket for that jurisdiction. So each Roanoke City and Roanoke County and Salem City and the outlying counties all have different tax rates. So they're calculated differently. They're based on the actual assessed values of the property, not the sales prices in our area. And then for homebuyer education, a lot of these courses, the VHDA courses right now, some of these are only offered online at this time because of COVID. We used to offer them monthly here in Roanoke, but there are just some resources. I would say if you wanted to take a class and just to continue your education, the VHDA.com, the homebuyer education class, is a good one. It is required. It's longer than the others, but it is required for several of the loan programs. Once you get your certificate, that certificate is good for 2 years. So if you wanted to start plugging away at that and, kind of come and go, I think it's like a 6-hour course total. But you can plug away at that. And if you were then to do an FHA loan or a VHDA loan, you already have your certificate if you purchase in the next 2 years. And that's really about all I've got there. As far as loan programs and senior programs, to address your question, I am not personally familiar with any senior programs, with the exception of like reverse mortgages. And that is a loan program if you're an existing homeowner, and they work just that, they're reverse, they're backwards. So not necessarily from a purchase standpoint. I'm not aware of any senior programs, at least in our market here.
Okay, thank you.
Absolutely. So any other questions?
Yeah, I have another question. I have a lot of questions here. Well,
Good.
For example, in my case, we bought the house and we got the appraisal, and everything was supposed to be working correctly. But 1 year later, we had a huge tree who was falling to the neighbor house. So we had to pay somebody to cut the tree, to trim it. I don't know the name for that. It was like a $4,000. So do you know if we can, I guess, because the time have passed, the insurer for the house is supposed to cover that kind of accident, or I don't know what is the name.
Yeah, it would depend. So when you have a loan on the property, we as the lender require that you carry homeowners insurance for situations like that. So yes, and that would be something that you would call your insurance agent and tell them what happened and ask if you should file a claim.
Oh,
So that's
but
kind of the purpose of that insurance. And I think then, you know, depends on what it is and how much it is as to whether or not you want to file a claim, and then depending on what is or is not covered. But when you're shopping for homeowners insurance, those are always good questions to ask of what is covered in those types of scenarios.
okay, thank you.
We always suggest that you carry homeowners insurance at all times. We as a lender will require it when we have a loan on the property.
Yeah, we had insurable. I, in the moment, I didn't think about insure because it was something in the backyard. But then
Right.
we spent a lot of money just for avoid the tree go to my neighbor house, or you know.
Yeah.
But then I think, well, maybe the insurer can cover something like that because
Right.
it was something serious.
Yeah, you would definitely want to call and ask about that.
Okay, thank
That's a
you.
great question. Yeah. Any other questions?
So for my students, you guys either have to ask one question or talk about one thing that you learned. So you can either ask a question or point out one thing that you learned. And just to lead by example, I didn't know that about co-signing.
Oh, yeah.
I didn't know it was like you were equally responsible. I thought it was kind of like, yeah, like I'll help them out if they need it, but like I didn't know it was like if you buy a car, like it's your car if they stop paying for it, or you know.
You're just as responsible for the payment as they are.
I
Basically what you're signing up for is you're saying, if they're not going to make the payment, I will.
yeah, I did not know that. So glad I know that now, right?
Right. Good.
Luis, what about you? You had a couple questions you had a lot of questions the other day.
Yeah, but I really know the requirements, and I don't meet a lot of the uh, the requirements to buy a house yet, because also I don't have the 2 years in the job. For that information, I have to uh, hold, or I have to have a lot of considerable amount in my savings for the make some expenses in the process to buy a house. So I think so. This thing is a very good things to think about it. Yeah. So now I think so it's a very important decision. Also, in my case, I have to wait for my green card, maybe. Uh, for now, like, I only have a visa for 2 years. After that, my job include one extension, but I only get 5 years. After that, I have to start to my time with a green card. So I think so. Yes, I have a lot of questions, but the basic question I don't need yet because I don't have all the requirements yet. So
Well,
this is good information.
you may be closer than you think, because you do have a 2-year work history. So it may not be that the work history is here with your current employer, but you do have previous work history.
Yes.
So
I
that,
have 16 years of
yeah.
experience
So
in
that would go
Mexico.
on, that would just go on your application. The application looks at, requests a 2-year work and a 2-year housing history. So we would just document your previous employer.
Okay.
Okay.
Yeah.
Okay.
So you may be, that might be a good conversation to have offline. You might be closer than you think if you feel
Yeah.
like homeownership is for you.
Yes, I think so. It's good for me because I paid rent for 1 year and a half,
Yeah.
over 1,000 So I think so.
Yeah.
It's a good chance to buy a house now.
Yeah.
Yeah.
Good.
That's
Okay,
something.
so I have
Oh, go
another
ahead.
question. I'm sorry. So the work history don't have to be in United States. So I worked 30 years in Dominican Republic. That count here
So with
for
speaking to the program, the loan program that I work with, we would look at that. We would
okay.
consider that.
Okay.
Wow. Okay.
Another question about my work history in United States. It had to be continual, or like I worked 1 year from 2017 to 2018, and then from 2019 2020, or it had to be something continual?
We would look at that on a case by case basis. We would just have to make it make sense.
Okay, thank you.
Yeah, absolutely. Yeah. Well, and again, so with this presentation, it was kind of more of an overview. And as I mentioned at the beginning, as you start to walk through that process, and if you decide you want to purchase, there will be additional courses that you will complete for home buyer education that goes into a lot more detailed information. I just didn't want to duplicate a lot of that because it won't be fun if you have to hear it again in the future. So just trying to kind of give you a higher level overview of some tips and things to know as you prepare to make it easier. But I would say, if you're interested in purchasing, talk to, call me, talk to a loan officer, talk to someone as soon as you can. That way we know exactly where you're at and where you need to be, and then you work at a pace that you're comfortable with. That's the most important part. There is no rush in this process. There will always be homes to purchase, but the more you know, and the more you know where you stand, then just the more control you have over the transaction, that you work at a pace that you want to.
And Luis, we also have Araceli and Darian who are here, and they're from a financial empowerment center. So if your main concern is like getting your savings together, they might be really good people to talk to, because I think that that's a big piece of what they do, right? Is help you guys put together budgets and look at savings and prepare financially for home ownership. Because I mean, you have a great job. You're a computer engineer. Like, he's not working at McDonald's, right? So you probably are a great candidate for lining yourself up and getting yourself together for home ownership.
Good. Yeah.
Okay.
I will
Yeah.
do.
So don't feel discouraged. I think some of those numbers are intimidating. But I would definitely recommend that you talk to maybe Araceli, trying to get your budget together, and then maybe reach out to Allie about
Okay,
that.
will do.
I also want to add to that. Yo hablo español si algunos de ustedes están interesados en lo que estamos ofreciendo nosotros en Freedom First, para ayudarles con las cosas que habló Ali, o para ayudarles en ahorros, cómo ahorrar su crédito y cosas así. Se pueden comunicar conmigo. Le voy a mandar la información a Morgan para que ella tenga la información lista para ustedes.
Okay,
Muchas gracias,
muchas
Araceli.
gracias.
De nada.
You're immune.
I was like, so it's not English class, and you can speak whatever language you want, right? Out of here, you guys can do it whatever. And then, Darian, do you speak a different language? I noticed your last name, I just wasn't sure.
I'm from French descent, but I do not speak another language. I mean, besides hola, poquito español.
Okay. I wasn't sure if you spoke French or not, because I think Rosalie speaks French.
Yeah, I'm working on that in the next couple of years. I plan to be fluent in some language. Okay, baby.
And the FEC also, though, we have partnered up with a translation and interpretation company, and they have over 70 languages available. So anyone that is wanting to have a session with us, we have those services available too.
Good to know.
Araceli, I might get some more information from you and post that around Blue Ridge Literacy, because I think the language piece would really help a lot of our clients who are just beginning.
Yes, I need some of them. I need to speak Arabic. Yeah, I need to translate.
Hello?
Hello?
Yes,
You're on mute again, Morgan.
So are you saying that you would need Arabic?
yes, but I didn't understand. Yeah, I need translate Arabic.
Okay, awesome.
Yeah.
Saleh, I
So,
will talk to Ahu and she will give you this information, okay?
Okay.
Okay.
so do you have an email where we can contact you, or do you have our email?
Yes, I have an email. Can I, if I typed it into the chat, would that help? Or should I send
Sure,
it to you? Okay.
sure. And then I'll just, I guess, I know you requested Araceli, but I can go ahead and CC her with the email, or because
No
I'm on my
problem.
computer now.
Whatever works for you guys works the best for me.
Okay.
So unless you guys have anything else to add, should we stop recording now, or are you guys out of, if we're just getting more into like the individual question and answer, I'll go ahead and stop recording. All right, 3, 2, 1.